All right, everybody. Happy Friday. Welcome to the final hour. It is 3 p.m. on the 20th. This is Chris Pulver here. How are y'all doing? Hopefully, we had a great week in the markets. It's not been too shabby to see a couple all-time highs. We are seeing the market fade just a little bit off of Thursday's high. Some interesting gaps from Wednesday's close to Thursday's open and melt up to Friday's open and pretty indecisive day. The reason I have a high here and a low here is if we don't really have a lot of direction, I could see the markets trying to figure out where to go and possibly being indecisive. Now, this is a fairly wide area. The average trading range on the daily chart, if I go to the daily about 753, the weekly, I'm not sure why this is reading weird on the weekly. 1 week. Runtime error. Well, figure it out, TradingView. There we go. 1520 on the week. 1520 on the week. There we go. Okay, so 1520 is the weekly trading range for the S&P or the SPY, and this high to low is around 12 points. So we could have an entire weekly trading range and still not break the FOMC low from Wednesday and still not break the Thursday melt up high. So therefore not getting to all-time highs, not necessarily doing any type of damage to see that the market is heading lower. And if that's the case, we may have an indecision week until price proves otherwise. I did have a long discussion today with A1 Trading. I am still in the cautiously bullish camp. I'm wanting to see the market go up just like everybody else, but I'm also watching my charts, watching some levels. Here's something I can float out for everybody. Where'd that chart go? Here we go. Oh, come on now. Don't be shy. Let me float this out. There it is. There it is. Okay. So looking at a couple of levels, since we took out the previous all-time high, the next significant level of resistance, let me find a price point on these levels here. Okay. And if we take out the Labor Day sell-off lows, I'll look at these levels here. Right. So I'm watching. I just have a couple levels picked out. Let me go to the chat here and say hey to everybody. Bucks in the house. Can you talk about ES or MES with your daily profits? Yes. So ES and MES. Well, if that's talking about the daily profit play, Buck, that's probably going to be in the 4 o'clock class, not now, if that's what you're asking. So today's final hour is we're just doing market recaps, trade recaps, how'd everybody do for the week, where I think the market's going, what I'm looking to play going into next week. And so what I have on this chart is I have a nice forecasted resistance zone, and that would be SPX around 58.15. So let me write this down. So I've got the 58.15, 58.15, and a 58.77, and probably right around 6,000. In fact, it's right there at 6002 to 6. Yeah, I mean, I would just say 6,000, pretty close. And 6,000. All right, so those are my resistance areas, and my support. 53.15 to the downside. 53.15 to the downside. And 52.77. And one more level. Obviously, you have our August 5th low where this thing bottomed out around 51.16, but I've got a calculated support zone around 5,200. So 5,200. And we have our August 5th low right there. So I'm going to take a screenshot of this. There we go. And I want to look to see, based on expiration and a probability cone, this should help me project. If I wanted to be long at least one standard deviation on the S&P, we have expirations here, so I can pick the appropriate strike price and see what's within reason. And I can kind of optimize that if I want to go long or short. I'm honestly not really sure if I want to take, long positions at all-time highs. So I am trading some futures with that. I'm trading MES to the upside with a 58 and 5900 long put, or I'm sorry, long call. And then I'm trading to the downside below. I'm actually going out to November for a hedge on ES, which is actually MES, so it's micro S&P futures down below the September Labor Day sell-off, which is right around 5,400. So I have a long put at 54, a long put at 53, and if we get there fast enough, this is how I'd make profit on those trades. So to the upside, 58 and 59. If we just go higher, those will gain value. Those are out to, I think, March of next year. So I push those out pretty far, trying to get Q4 rip Q1 into next year and see if I have enough time and seasonality to get up to those highs. We have this probability cone. Let me see what those expirations are. These expirations are going to be somewhere. I mean, if we're just staying on this curve, we could get out into October, November. But if we have a pullback here, then I will recenter this probability cone and see if this shifts with current price and just keep an eye on things. But to the downside, out to November, we could see October, November with one standard deviation. Could be as low as 53, could be low as 52. If we get out to November, have a downward move, and this is all subjective. I mean, it's calculated, but you never know what's going to happen, right? I mean, even with all the bells and whistles and all the tools, price is going to do what it's going to do. It's going to go up, down, sideways, fast or slow, and it's going to happen however it does. There's nothing we can do to control that, all right? But point is, I do want to map out some of these levels. So I'll go ahead and I'm going to get rid of that probability cone. So let me take care of this. I'll remove it and then just check out support levels and resistance levels. So we just broke the high, all-time high, which was not taken out in the month of August, but we just broke that recently and we're still somewhat indecisive today. So got it pinned right there. Here's today's price action. We did hang out right around the 5,700 zone. It was actually a fairly calm day considering triple witching. Didn't really matter. The market just did its thing and was pretty sideways for the day. So Monday's a new day. Next week's a brand new week to finish up the month. It's a full trading month of September. Let's see what we have for the news next week. If I go to next week, anything that stands out. Monday, we have PMI numbers coming out of the Eurozone. We have PMI for the U.S. at 9:45 right after opening bell. Cash rate decision for Australia, looking to pause and keep rates the same. Bank of England kept rates the same. Bank of Japan kept rates the same. The Fed cut 50 basis points this week. Market liked it on Thursday, gave some of the gains back today. We have consumer confidence on Tuesday. CPI out of Australia. Swiss National Bank with a rate decision expected to cut another 25 basis points. Hopefully that helps out my Swiss franc pairs, which I'm currently long against the Swiss. Everything except for I'm short the Swiss yen with small positions. I'm up like $100 on that right now. But the other ones I've been building for several. I mean, at this stage, probably over a year. I got into a lot of these Swiss crosses early 2023 when the positive swap trade was actually getting paid to us as traders in FOREX. And so I started getting long against the Swiss early 2023, and I've been in those trades, in and out of those trades, mostly in, but taking very little profit and just mostly building positions and managing the trade. So Swiss National Bank may be cutting rates. I kind of like that. I hope they do. I hope they do it with a lot of dovishness because I'd like to see the market, continue to see some risk appetite. And if that's the case, Aussie goes up against the Swiss, CAD goes up against the Swiss, Euro, Pound, Dollar, New Zealand, all up against the Swiss, and that's the basket that I'm trading. Okay, would I take a trade at the close of the day on SPX? No. Nope. There's too much gamma risk. There's too much late day movement, and you're going to get very little credit for it. I've seen a lot more movement at that 3:45 to 3:50 p.m. that it's not worth it. I mean, right now on my broker platform, you're going to see the expected move is going to be very, very small. So here's SPX on the day. If we go out to today's, I mean, if you traded with me this morning, we had an expected move of probably 30 points or so. And right now we're looking at an expected move of around 7.5. So if you were to take a trade on this right now, it's like you're essentially going after, massive risk for any type of outlier move. It's late in the day. I'm not interested in trying to take that trade. Plus, if you're doing a zero DTE, I mean, there's really nothing to get for it. I mean, you're going to get maybe 20 cents, 15 to 20 cents with a $4+ risk. So not worth it. And it's all. I mean, it's late in the day, and we've had a good week. So, all right. So news next week, Swiss National Bank, that'll be interesting. I hope they cut rates. Thursday, we have unemployment claims for the U.S. We have final GDP. This will be, a sign of the economy, good or bad for the U.S. Right now, the market's probably wanting good news more than anything else because it's going to help, build a case for more highs, more bullishness. Powell's actually speaking on Thursday morning, which is interesting. So we have GDP numbers and unemployment claims Thursday before the bell. And then 9:20, Powell speaking. And what the heck's he doing there? Pre-recorded opening remarks at U.S. Treasury Market Conference. All right. Who knows what he's going to do? And then there's more Fed speakers. This is silly, right? 9:10. Fed speaker, Fed speaker, Fed speaker. Powell speaks. Fed speaker. ECB speaks. Fed speaker, Fed speaker, Fed speaker, Fed speaker, Fed speaker. All day Tuesday or Thursday next week. I mean, it's on the calendar as low medium impact, but it's not nothing. I mean, we know this Fed has an incredible amount of power and influence in the market. So, it's something to note along with the GDP and unemployment claims. Did the Fed make the right decision by cutting 50 basis points? Let's hope so. Let's see what the market does and reacts to it. I have data that suggests both. If we cut near all-time highs, the market tends to like it. 1, 3, 6 months, 12 months out. I have 50 basis points cuts. Market doesn't like it because it tends to go down. Last time we cut 50 basis points was 2001 and 2007. And if you think about that, we know how those went. Not too hot. So it is going to be one of those situations where history doesn't repeat itself, but it rhymes, and we'll have to figure out how this rhymes. I've seen images of this is what 2008 looked like, and we have very similar price action to today. Doesn't mean anything though. Okay. All right. Francois, do you do currency pairs? I prefer it. Much cleaner market than equities. Yeah, it's mostly technical, but I've been trading currencies for 15 years, and I can say that it's easier to make money in equities because you have a directional bias and a positive drift. So currencies, it's definitely a trader's market. You can grind. I've seen a lot of good Forex traders that have gravitated more towards futures trading now because you have really good pure price action, and you also have a very concentrated window of volume and liquidity. And I'm kind of leaning that way too. I use Forex as an investment piece. I like to trade on higher time frames and kind of invest at support levels, invest at resistance levels, and build positions small and take in my profit targets. I'm just really picky. I'm way more active in equities and options now, and simply because it's just easier for me to manage a portfolio. The drawdowns are way tighter. I essentially trade a Forex market with zero leverage. I've got a 50-to-1 leverage account as a U.S. trader, and I trade with zero leverage. So I make more money, more consistent income, and way better risk management using equities and options. So, not saying anything against Forex, but I've done it for a long time, and it has its pros and cons. I mean, the Forex market is a 24-hour market, and you can see maybe 1 hour of day of movement that's worth trading, and you never know when that's going to be. We have these hurry up and waits where the market breaks on a news event, and the nice thing is it's typically technically driven, but sometimes you don't get any movement until the news actually hits the headlines, and that's kind of frustrating. So, like I said, yeah, currencies are great. I've just shifted away from intraday. No, I have signals. I've got a couple. I've got some bots that run in the background that trade actively, and they do really well. And then I also have some intermediate systems that give me some signals on like the 1 and 4 hour charts, and I like those little intermediate swing trades. So I still trade currencies a lot, but just it's not exclusive. I mean, I'm definitely a well-rounded trader when it comes to I trade everything. I want to trade everything that's easy to read, manage portfolio. Because if I just had to live and die by trading Forex, I would drive myself crazy because I just don't think there's enough movement day to day, week to week. I mean, you can have periods of nothing. And it's like if I traded options, I can actually make money during nothing. I can't do that in currencies. You need direction. Yeah. Yep. I know. You see the question. Yeah. The comment there. Got it. Okay. Carla, I was no longer. I'm doing my own thing now. Okay. So that's the calendar for next week. All right. Indecisive. This is what I put on all my charts. I've got some highs and lows connected. This is the SPY. Here's the QQQ. A little bit different look to the Qs. I may take the Qs and do the same thing. So I'll just connect this high right here. I'm trying not to get too noisy with my charts, but it would make some sense if we have some type of blow off move in the tech space that Qs can do something along these lines. Something like that, where we just see potentially some indecision. Now, it looks like there's some open space. Right? It looks like there's some open space. If we break above the Thursday high, the Qs might be able to rally and reclaim the all-time highs. If the Qs hang out for the next week or so and it's indecisive, doesn't break the Thursday high, doesn't break the Wednesday Fed low, we deal with some chop. On the right side of the trend line, let's say that we have, this little bullish pattern, and this market's trying to break the neckline. Just saying, don't fight this thing. If this market wants to go up, don't fight this thing. Okay. So if this were to break the highs, I could see the market heading to highs. And I could also see that having room to run towards 540 on the QQQ. And, possibly if the SPY goes along with it, they can be correlated where all the major indexes go higher, but price has to prove it. Because if it doesn't, then I'm looking for some indecision and trying to take advantage of some of that. And I'll just wait and see what price does. Dow, here's the DIA sitting here near resistance highs. Haven't necessarily turned bearish or anything like that. We could still put a lot of pressure where this is, this CPI. If you remember that swing from CPI last week, Wednesday, when the market pivoted super hard, ripped all the way up here, had that Wednesday push, Thursday push, Friday push, and then this week was certainly a little bit more choppy. So here we are with this CPI low, big push to the upside. If this just pauses, I'm not necessarily calling the top. I don't want to call the top because what if this breaks and goes higher? Well, it looks like we have more of a blow off top if that's the case. And it's not my job to call tops in the stock market. If anything, I'm looking for opportunities to buy low. So if we have a range here, maybe there's a little short-term action there with a tighter Dow. We have some volatility, maybe back down towards the post Labor Day sell-off area. Maybe this area is a spot to buy or trendline support spot to buy. Looking for a couple of bounces in there. But I'm just looking for indecision, and there's a lot of potential price movement that can take place. If it blows the tops off, life is easy. If we blow the tops off, life is easy. If we deal with some indecision, then traders make money. So, all right, Russell, similar. Not quite at the highs that we saw from the summer in July, not quite at the post-Labor Day sell-off lows, and not quite at the August 5th lows. Also, not quite at the all-time highs. So we're still making higher lows on the Russell. I'm still looking for opportunities to buy lows if we get them, but I'm just waiting to see if price is choppy and maybe there's another push higher. That could be a nice bull flag coming on the Russell. If we come back down to the lows, I would be looking to take some stabs at that with some defined risk. If I'm wrong, I'm wrong. If I'm right, that's an easy trade to sit and hold. So that's probably what I'll end up doing on the old Russell. Okay. All right. VIX. VIX had let's see what we did on the week for the VIX. It wasn't really super high or low. Candle itself came up towards 19.37, looking to close around 16.17. I would say we're at low to moderate volatility. We're not at super low volatility like we had pretty much all this year with that vol event coming in August, but we're not crazy high either. So I'm still, low to medium. I'd say low to moderate volatility, and we haven't seen a ton of crazy movements. I mean, this week the big movement was the fat finger trade at 2 p.m. on Wednesday with the Fed moving and then fading, and then a huge gap overnight because we had the futures market just literally rip right after the close and move all day after closing bell Wednesday into the Asia session, into the London session, into the U.S. session, and futures was up 1.5% on the S&P, over 2% on the Nasdaq, And then we came into Thursday's trading. It was like pretty sideways. The actual day was pretty sideways. So anyway, volatility has faded just a little bit. Let's get into oil. Oil still hanging here off these nice support levels. I did take profit on oil this week. If you saw this post in my Telegram. So winners this week, we had the daily profit play. I had 7 for 7. So 7 trades, 7 winners this week. Pretty happy with that. Pretty proud of that. A lot of traders making some good profits alongside me, which is awesome. Had a win on Alibaba. That was a long call. Also had a credit spread on Alibaba that I'm winning. I'm taking an assignment on Baidu that I'll end up looking at a wheel strategy next week. I had a win on Palantir for a bull put spread. I had a long call on SPY for a win. I had a win on silver with a credit spread. It's silver futures, so /SI. I had a win on PayPal. You saw me in the live session yesterday take that trade. I had a trade. I think I was up like 950 to 1050 per contract. So it's a nice little profit there on PayPal. I had a win on CL. That's what I was talking about here. It was a 65 by 6450 or 6550 by 6450 credit spread. Took about $250 of profit there. FXI and T and Pfizer. So FXI, T, PFE lowered my cost basis. I have shares of those. I had my covered calls not get called away. Actually, I take that back. I didn't get it. It would have been called away on FXI. Let me see what the price is at here. So if I go FXI, where are we at? FXI is right here. I went ahead and rolled it up and out to the $29 strike out to December, and I'm looking to see if I can make a couple more bucks. So I'm not in deep. I mean, I only have 100 shares for several accounts, so I mean it's not a lot of exposure. Obviously, price can do what it wants, but if we're going to stay somewhat directionally bullish, 29 gets me back up towards these highs we saw this year in May. If there's more upside here, I'd like to see if China can actually benefit from this global bank rate decision where we're seeing central banks cut rates right now. So let's see who's cut so far. Pop quiz for everybody in the room. What central banks have cut rates? Okay, now I'm not talking about, I want like the G7s. I want the majors. Okay, so who's cut rates so far? Did the RBA cut rates? No. Okay, how about the BOC, the Bank of Canada? Yes. How about the Swiss National Bank? Yes, possibly cutting next week as well. How about the ECB, the European Central Bank? Yes, they cut 60 basis points last week. How about the Bank of England? I know they paused Thursday. Have they done it? I want to say no. I don't know if the Bank of England cut rates. Let me check. Bank of England, yeah, they did cut rates by 25 basis points. That's correct. So I stand corrected on this one. Ah, fudge. Dang it. I'll type that again. So let's type that up. So RBA, no. BOC, yes. ECB, actually Swiss National Bank, yes. ECB, yes. Bank of England, yes. RBNZ, yes. Fed, yes. BOJ, no. Okay. So right now we have additional rates expecting to be cut from these central banks. RBA is still firm at 4.35, and I think they have a rate decision coming up next week. BOJ said no to raising rates because they went from negative 0.1 to 0.1 to now 0.25, and they're talking about a path towards 1%. The Fed is now looking to have a fairly aggressive rate cut cycle. I don't know if it's good or bad. I really don't. The 50 basis points thing, as much as I was not in agreement with it, and then all of a sudden I started to justify it the last couple of weeks, I'm like, okay, well, if they have nothing but employment news, nothing but inflation news, and nothing but earnings until the Fed decision November 7th, this is at least a way to show the market that they're not behind, because they can do a little bit of a catch-up cut, and that's what they did. And the market, took it in stride because the language out of Powell seemed to be pretty optimistic, and I think the market did like that. But I'm still a little skeptical of price action. Okay. Francois says one of the most difficult parts of trading options versus purchasing equities is setting up stop losses. Well, why are you long options then? I mean, it's actually very easy to set stop losses because you can use defined risk. If I was going to risk 100% of my trade, I could go long option, and if I paid $1 for it, $1 is what my max risk is. Defining risk in options is super easy. I rarely use stop losses. If I'm long an option, I want to use the stop losses to go to break even or better and manage it, but it is defined risk when I think about options trading. I know what the option costs. I know what the risk reward is. I'm willing to lose essentially the entire trade when I take it on, which is why I trade often and trade small. So, theta decay throws off the risk reward. I mean, it's always the same. Like the efficiency of options is the market's going to have all the Greeks work in their little vacuum of 0 day to 1 day to 10 day to 50 day to 60 day to 360 day. The components work the same way. That's what's cool about the market. It's the same trade. You can take the same trade from a 0 DTE to a 365 day to expiration, and the mechanics and all the Greeks work the same way. Obviously, one just works way, way, way faster when you're going down to a very short duration like a day. Okay. Yeah, this week. Was it RBA this week? They paused this week, right? I thought they were on the docket for next week, but it's this week. I think you're right. They kept rates the same. When was it? Or are they next week? This is this week. When's RBA? Monday PMI. Yeah, so RBA is next week on Tuesday. BOJ this week. Yeah, they decided to hold rates the same. Fed cut like crazy this week. RBA and Z cut before. Bank of England cut before, but not this week. They paused this week, but they're still sitting at 5% after 25 basis points cut. ECB made a big cut last week, 60 basis points. Swiss National Bank has gone down from 1.75 down to 1.25 with another potential cut forecasted for this coming week on Thursday to bring them down to 1%. BOC, the Bank of Canada, has dropped from 5% to 4.25. So they were up to 5%. They've cut, I want to say they cut 50 basis points for the first one and then cut 25. I could be wrong, but either way, they've cut about 75 basis points from their peak. So central banks are moving, right? And what you can see here, the trend is they have all started to cut. Okay, Bank of Japan has not, and that's the big outliers. Like, why is there so much monetary policy divergence between the Bank of Japan and other central banks right now? Well, because inflation is ticking higher in Japan. You know, they've always talked about 2% inflation, and they're seeing inflation start to tick up towards 3%, which means they need to be a little bit different on their monetary policy, which is always crazy. It's crazy extreme, and it's very radical, and it's very difficult to trade. And speaking of, Francois, you're asking about currency pairs. How do you like the Japanese yen if you like Forex so much? Because you want a technical pair, don't trade the Japanese yen. It can be technical 9 months out of the year, and then 1, 2, 3 months out of the year, it is the most irrational, destination-driven, momentum, crazy currency that will go 1,000 to 2,000 to 3,000 pips, and it does nothing more than a pause, you know. So Bank of Japan, it is the ultimate challenge in trading currencies, which is why I tend to not trade Japanese yen. I just stick to the currencies that are efficient and do have really good technical alignments and tend to behave a lot better. And I also deploy my robots in those currencies as well. It's a good technical market. I'd much rather be that way. Okay. Thomas is asking, do you have any plans on the QQQ in our morning trade? We can look at it, Thomas, but the QQQ is not going to give us necessarily any extra income. It's the same mechanics as what we would do on like the SPY. I like it if I'm short. I mean, if you're short the yen. I mean, you had a good couple of years to do that, but after August 1st, 2nd, 3rd, or after the top in July, I mean, if you're short dollar yen or short and getting yen strength, I mean, it's obviously played out lately, but for the last 2 years, certainly not the trade you want to be in. So anyway, to answer Thomas's question, QQQ, we can talk about today at the class at 4 o'clock. I mean, it can be used. I did take a trade last week on NDX with the exact same strategy that I take for the daily profit play. I did take some later day credit. I think I pulled in almost $4 of credit, did my typical take profit, and hit the profit, like 45 minutes later. So there's ways to use it. I mean, the SPY is good, the QQQ is good. I plan on talking about SPX, NDX, ES. It'd be ES and NQ or the micros. Depends on what risk profile you have or what you can and can't trade. If some traders can trade futures, we can talk about ES and NQ. If you can't trade futures, then we can talk about the other stuff. But that'll be class today. I've got a master class for the daily profit play at 4 p.m. Cool. All right, let's keep going on the list here. So we have oil. That was a nice little profit play. I'm done with this trade. That's over and done with. I might look at the same thing. If we come back to oil again, I might take another trade on it. Let me go 65.50 again. Maybe I'll go 66. So I'm going to see if we retest the low. I still have some puts and some bigger credit spreads on USO and CL out towards the end of the year in case this is in fact a low. Global demand is part of the problem here. We've had a lack of demand. I don't know if this starts to get the risk appetite churning again because the central banks are starting to cut. Things are getting a little more easy. And if there's optimism and sentiment that's swinging back to bullish, then maybe that keeps this demand bid for oil back into the mid to high 70s, maybe $80. I'd like to think that the floor is kind of here around $66 or $65, and the ceiling is around 80. Let's say $90, $90 for the ceiling. So floor to ceiling, I would just expect oil to kind of stay within that range, and no major conflicts, no major extremes, and hopefully it doesn't break. Okay, natural gas is bid a little bit higher. I want to see if this will come back and retest the lows at 1.65. It may or may not. To me, this also could be a nice head and shoulders trade. Left shoulder, head to neckline, right shoulder. So if we break $3, then we can start chewing into all of this inefficiency where, natural gas has just dropped a ton and we've kind of based here with that low at $1.50. If we measure that move, I'd say that move right there is going to be close to hitting a symmetry target around $4.50 to $5. So I may look for some exposure on natural gas, but I don't typically like to take it into the winter because it's not as in demand as we have in the summer. So to be determined on that one. Gold, pretty much everyone's favorite asset right now. I'm still long gold. I like it. I'm long GC. I'm trading a bunch of options on GC. That's gold futures. I'm also long CEF and PHYS. That is a little ETF on gold and silver. I'm also long GLD with ownership. I bought GLD back in here. I've added to it once on these pullbacks. I've traded call options. I had diagonal spreads. I just want to see a pullback, to be honest. I'd love to see a pullback to give me something to then either add more credit spreads to, add more option trades to, trade GC a little bit more aggressively, add more to my GLD positions to accumulate. But so far, I mean, it's the gift that keeps on giving. We're making higher highs, and the bulls seem to be in control. It also has the appearance of a pretty healthy bull market because we're not just going ballistic here. This market needed to go sideways or pause or pull back, and it did, right? This market's just been this slow, steady melt up. And I mean, until we have a pullback, gold just continues to drift higher. So the only time I'm really going to be looking to take profit on gold or protect my position is if we start to do something like this. If we just start to get ridiculously one direction and it's like a rocket ship, that's probably going to end badly. And so I would be looking to move stop losses and trying to stay out of the way and just let this thing go until it gets trailed and volatility kicks in when we peak. I don't know if that's a round number like 3,000, but whatever happens, I'm really just looking to stay long on gold until I think 3,000 is a valid target. Okay, silver. Silver looking pretty good the last 2 days. We finally got above the structure. Resistance. We got 2 days above it. I'm hoping we can stay there. I would like to be long and looking to see if this direction will stay to the upside. My target here is 35.88. If we pull back again, that's fine. This is still a big accumulation zone for me to add more to bottoms or lows, and then look to see if it heads up later to the same price target. So I'm still trying to take it up towards 35.88. When you say you're long on gold, do you use GLD? That's one of them, yeah. I'm long GLD, and I'm long PHYS, I'm long CEF, and I'm long GC for futures. That's how I'm long gold. That is my way to express my bullish position with those different instruments. Silver, I'm long SLV, I'm long PHYS, as well as CEF, which has gold and silver sprinkled into both of those. I'm long SI for silver futures, and I'm trying to target 35 plus, and I'm trying to target 48. Ultimately, I want to stay in silver until at least $45. It's a big play on silver, but man, if we get there, I would love to turn my current position another 45% higher. With the not with the leverage necessarily, but even if that's what I have, I would turn. I'm trying to think. That'd be another. I'm up about $38,000 right now. So if I make another 45%, just like pure correlation, I'd be up another 17 grand on 38,000. So I'd be up $55,000 on silver. Not a bad little position to be built. Hopefully there's more to it. I'd like to add some, but probably more income plays versus buy and hold. Bitcoin. I'm watching the price of Bitcoin closely because we are potentially breaking out of this little trend line. Now, this doesn't mean that Bitcoin is prime for new highs. We could still have a lot more indecision ahead, but let me put that line back up there. If Bitcoin does something like this, where we are up and we pull back and we go up again, we pull back. I mean, there's still some clear resistance here with lower highs that we've seen since the top in March. And Bitcoin might pull all the way back down to the midpoint or pull all the way back down to the lows again. I'd still like to accumulate down here if it's offered. But I will say that if we go sideways, let me draw that line again. If we go sideways and it just looks like Bitcoin is staying right here, that could be a nice little bull flag and possibly a long trade that gets us either short term, get the stop loss in at break even or better. And if this thing breaks and goes to the highs, I mean, the mining cost on Bitcoin right now, from what I'm seeing, is like 78 to 79K. So we have the actual spot price quite a bit lower than the actual mining cost. So I would suspect that those catch up, and the spot price can at least catch up and then maybe overshoot it. So I'm long Bitcoin for a lot of reasons. Yep. SLV, correct. SLV and SI and CEF and PHYS are the ways that I'm trading silver. But yeah, SLV it's one of my favorites. So that's one of my bigger positions as well. Bitcoin, I'm still long BITO. I'm long IBIT. I'm long MicroStrategy. Ethereum, certainly looking better. I have some credit spreads on Ethereum that I will win if price can get back into this gap. If we get a gap fill in here, okay, we get a gap fill in here, then Ethereum looks pretty good. Also, whoever was asking about the late in the day trades, this is why I don't do it, because we're only about 20 minutes away from the close, and look where price is at. I mean, we've seen in the last this is 235, 56.84 to 14. We've moved 30 points. 30 points in the last 30 minutes. I mean, and just this is what happens towards the close. Is usually we see like a decent amount of price action near the close. Not all the time, but typically we can see sometimes 5, 10-point moves, 20-point moves right before the close. Doesn't mean anything for the next day. I mean, we're going into a weekend, but this is where we started. We gapped lower, and we actually came all the way back today to close right where we opened. Or I'm sorry, we are closing today. If we stay right here, we'd be closing today right where we closed yesterday. So you look at this day itself, it's actually like a zero-sum day where it didn't go anywhere. But it was down pretty much all day, and we came back to fight back. We'll see what happens for next week. Okay, back to Ethereum. I'm still long with some credit spreads. I'm looking to see if Ethereum can get back above. I've got a $60 sell put. So if we get above that, great. If we don't, I'm willing to take some ownership of EETH, and hopefully it's not a high leveraged ETF, because I do want to take the shares. It's not super expensive, but I will monitor that. There should be some decent premiums around it as well to sell. You have so many trades. How do you track them? Spreadsheet. So here's how I track them. I type them all in, and then when I need to find it, I just go Control F and I look for my symbol, and then I have all my notes in here. So yeah, it's kind of tedious, but between a spreadsheet and I can look at the history in my broker platform as well. So if I go to the trading history, I can take any account and go to, we were just talking about SLV, correct? So SLV, I can look at a trade history on SLV and see where am I long, where am I short. I can calculate my credits and debits and figure out where my break evens are. So I can go, year to date or customize it. I can go back as far as I need to for some of these kind of core positions that I've had. So it's tedious, but if you want to know what your break even is, which I do, you got to do that stuff. Okay. It seems the funds often move in the last 20 minutes of the market. Yeah, I mean they're scrambling stuff around, and let them do it. I'm not gonna play with fire because that type of gamma risk and stuff. If I'm wrong in that direction, I'm dead wrong. That sensitivity and especially options trading, I don't love that. So I just try to stay out for the end of the day, unless I was looking to trade something where if I got it in now before the closing bell and I look for something tomorrow that's going to like break high or break lower, that's different because I'm actually letting the market do what it wants to do versus trying to get it now before 4 o'clock. All right. Japanese yen, BOJ, held rates the same. They talked down the Japanese yen a little bit. I'm still, I don't know. The Japanese yen is like this. Nobody knows what it's going to do. I wouldn't be surprised if we see something like this and we have more volatility ahead. Would the Japanese yen do something really stupid, like come all the way back to the lows that we saw, and maybe it reignites and re-triggers the carry trade? I don't think so. I don't think that's happening with other central banks looking to cut as aggressively as they are. I mean, the one thing that's happening now is it is likely that no central bank is going to 0% interest rates. Okay. So the Fed from 5.5% is likely not going to 0% interest rates. The Fed is probably moving closer to the 2-year, which is around 3.5%. So wherever that is, maybe it's they settle at 3.7, 3.6, 3.65, but it's going to be somewhere close to where this 2% or this 2-year yield is. So we started the cut. We had essentially a 2% buffer. The 2-year yield has been down, pretty dramatically. It was as high as 5.25. And the 2 years come down, and now the Fed feels that they can be less restrictive. In fact, you can see my notes right here. Fed has been restrictive. 5.25, 5.5 interest rates has been the peak rate. Now we just cut rates by 50 basis points. So now we're at 4.75 to 5. To be restrictive, the Fed has wiggle room to lower rates towards the 2-year, and they have room to lower rates towards the PCE reading. That is their primary measure of inflation. So between 3.6 and 2.5, the Fed has room to cut rates by probably 2%, if not more. Okay. But I don't know if the 2-year yield is going to continue to drop. And I don't know if that's going to actually boost the bond market or if it goes the other way where this is as low as it gets. And then the 2-year maybe elevates and all of a sudden it puts a little, I don't know, like a little turd sandwich in the lunchbox of the Fed because they all of a sudden are like, well, fudge, we can't be as aggressive now. We can't be as dovish and accommodative. We can't cut as fast. I don't know. So rates will make for an important factor we got to consider. Okay, what else? Other futures markets. I've been looking at this. I talked about it a little bit this week. I'm not in any of these right now, but this is palladium. I would consider getting long at 905 if we pulled back to lows. I have a support level there with a chart alarm. I'm looking also at platinum. Same type of thing. We have lots and lots of support going back into 2015. We had our COVID crash right there. If platinum came back into these lows, probably going to trade, palladium futures, platinum futures, corn off the lows, but setting a chart alarm down here around 353. We have a big low in 2020 in corn before we rip to the upside. I mean, all I'm going to do on these is probably do credit spreads. I'm certainly not trying to go. I mean, as much as I'd like to say I'm going to get long on corn because it's a great deal. It's going to be expensive. I could time it incorrectly and I could lose everything. So I'm just going to do a defined risk trade and see if I'm right, generate some income. And I think it's a bargain if we're sitting here near 2020 lows or all these. Look at how supported this was back to 2014. We have tons and tons of support back there. So if corn came within anything around that same area, pretty interested in getting long and probably stacking some, I don't know, let's say 2 to 3% risk for maybe exactly that in upside. And I can maybe stagger that out over the course of 6 months to a year. And maybe that generates, 3, 4, 5, 6% of profit for my entire portfolio. I can take a 0.5% risk or 1% risk and then stack up some trades. If I can catch a decent and high probability low here, all I need price to do is stay above it. If price stays above it, then I make some money. Soybeans, same type of thing. Watching for this support near the bottom. I don't think the bottom is in. We have major support back here in 2018 and 2020. We have major lows in 2015, major lows again back in the Great Financial Crisis 2008. So I'm just highlighting these levels to see if it comes to me. So if soybean comes to Papa, then I will get long. And then cocoa, more for the tracking purposes versus trading purposes. Right here, this is what I kind of like to see on cocoa. I don't know if it's going to happen, but if we can base here, wedge here, and cocoa wants to head higher, I'd love to see cocoa go back up, and I'd probably try to look to short it from there. I would treat cocoa like I did lumber, which is just trying to short it when it gets to this crazy run, sell off, fails at the high, and then sell it off. If you look at lumber, let me see if I can find random length lumber on here. So random length lumber. See if this actually shows the price. It's different. This would have been, nope, that's not right. Fudge. Lumber. So lumber, futures, LBR. See what I have for history here. Yeah, I mean, I think there's a lot of price changes since COVID. This would be, fudge, man. This doesn't go back to 2022. Lumber. Let me go to a CFD then. Okay, this would be, my gosh, I can't get anything that I want to read here. Huh? They must have really like busted up the pricing on lumber. I was just tracking random length lumber during COVID, and it was a great chart where it's like it just went thousands of percent higher and then crashed hard, came all the way back up, failed, and crashed hard, and it's all the way back down to, I mean, it's like at decade lows again. So I'm not saying cocoa has to do the same thing, but to me it would make sense that with this type of run that we saw from basically, I mean, how long has cocoa been nothing to then going up 1,000%? I mean, this move was insane. That was up 420%. So chocolate got expensive. But anyway, I just want to keep an eye on it for tracking purposes. I'm probably not trading it until it comes into a great spot for me. And then JNK, this is what I'm watching for credit spreads, your AAA versus triple B, your AAA versus triple Cs. If we have a credit crisis where there's not any liquidity and there's more restrictions and it gets tougher to see, money flow all over the world, especially in the financial markets, this tends to go down. Okay, I'm not saying it's happening, but this is a good indicator to see if we're about to see a bear market, stuff like this happens, right? When this starts to break and go lower. So right now on JNK, I'd be watching this. Right now, this has room to just kind of consolidate, do its thing. But if we end up breaking structure, then we might have a bit of a widening where all of a sudden, your AAAs are here, your triple Bs, your triple Cs, things get wider and things get less liquid and a little bit uglier. And we'll likely see that reflected in the stock market with a sell-off. So I'm not saying it's a leading indicator, but I try to make it one. But it is a kind of a bit reactive too, right? Okay. Anything else for today? Was INTC halted? I don't know. I don't think so. INTC. It's still live. Yeah, it's still live. There's 10 minutes left. So we had a big move. Is that today? $20 to that just happened? Wow. A little bit of some squeezing going on there. I wonder if that was some big order flow coming in. I mean, Intel is beat up. I look, fundamentally, it's like I want to get long Intel, but man, it's like, I don't know. It's like buying a freaking. It's like the, what is it? Not Powell. Warren Buffett's cigar butt, where he talks about like there's one last puff in it, and maybe that's it. And so Intel, it's a bit of a legacy tech stock, but right now the discounted cash flow model shows this fair value at $4. We're trading at 22. I'm not interested in taking any position. I was long Intel through that rip there. I took profit. I was interested in getting back in, but when we smashed below that, I wasn't looking to buy. I mean, that's kind of the same type of move as what happened during the Silicon Valley bank crisis and First Republic bank crisis, where the Fed backstopped it. and then KRE was your regional banks, and that thing crashed and then started to come back. It's kind of that position. Like, I get it. There's opportunity there, but long term, it's not something I want to be in. Qualcomm made a takeover approach. I mean, did it actually happen? Intel shares rise, Qualcomm slides following report of takeover approach. So we've got an M&A situation here, mergers and acquisitions, where is it going to happen? I don't know. So yeah, we could have there's some drama. I didn't see that news, and I'm not long Intel, so doesn't really matter. But yeah, there's something. Okay. Takeover rumor. Yep, I get it. All right. Paolo says I use TradeZilla to track my trades. Only just started using it, but like it. Okay, nice. Yeah, I use third party stuff. You can use MyFix Book and track your trades. You can use Market Log. That's another one to track your stock portfolio. But yeah, I just do a good old spreadsheet and a broker platform. So that way everything's in one place. All right. Hey, look, I've got a class coming up in about 8 minutes, so I'd like to take a breath and chat about that. With the members coming in at 4 p.m. and we'll run a master class to finish up the day and the week. And thanks for being with me today for the final hour. This is a new segment that I started this week, Monday through Friday. So I hope you find it beneficial. One thing that does help when you're in here, whether you're watching on Facebook or watching on YouTube or watching on Twitter, is leaving some comments. Certainly, if you're on YouTube, hitting that thumbs up button, liking the video. Any type of chat you do engage with during the session does help that old YouTube algorithm. So that gets more people to have it pop up on their sidebar. So when you come into YouTube and you go watch a video, it has all those suggested videos on the right hand side. So something like this. So we can get the old final hour with me popping up here in people's feed. So all that takes is more engagement from you, lots of yeses, lots of likes, all that stuff certainly helps. So if you would kindly do that, I would appreciate it. And Daily Profit Play members, I'll see you in about 7 minutes. Okay, thanks everybody, and have a great weekend. I'll be back on Monday for a couple live sessions as usual. I'll do my Daily Profit Play in the morning. I'll be with A1 Trading around 10:15, and then my 3 p.m. final hour. So probably more schedule time will be filled up. I'll probably be doing more sessions here and there, but for right now, that's a pretty good mix to have some opening bell action, closing bell action, and give me some good trading windows in the day. All right, sounds good. Thanks everybody, and